What's Monday again? I forget. Oh, programming Mondays. I got so much, I forget. But today we got a special treat. For Tech Tip Tuesday, we got a special treat. For Tech Tip Tuesday, we're gonna have our good guy over at Joe. Is it Selby or Shelby? I think it's Selby Jennings. I always get it. I always want to say Shelby like the car. Is what I have in my head, but I think it's Selby Jennings. We're gonna today. Now, last week I gave career tips, some career tips. Today we're gonna give some career tips and advice on quant trading. And sure our research on boards, so or getting in the area assets, crypto. How's good? Let's give a for coming on. Uh, D, did you bring up? Oh, you can't hear me? Oh man. Well, let's bring Joe up anyway and let Joe do his thing, and then I can readjust. You ready, Joe? Bring
I
Joe
guess
up.
hear me. Let me
I
know
can hear
if
you.
you can't hear me in the comments there, and then I can try to adjust. But yeah, awesome. I know I've been on it a few times on the chat, which is awesome. Great to be back and be speaking to everyone again. I am now at Selby Jennings, so we focus primarily in the financial services industry. Really cover fintech recruitment in addition to we'll start to get into the mergers and acquisitions space, generalized kind of consulting across the board in that sense. The team I sit on specifically is primarily focused in the quant trading space. So, essentially what that looks like is quant traders, developers, researchers, really across the board. And for those of you that I guess aren't as familiar with the terminology there, essentially what this is a way of trading, whether it's traditional stock options. I start getting into crypto and some kind of more exotic assets if you look at it in that sense. But essentially, what they're doing is writing very complex, mathematical focused algorithms with the idea of essentially trading on that algorithm, on that that type of a scenario. So it's very systematic in terms of the approach, as opposed to when you think of someone who is trading stock on their own, doing option trading. It's very at your own discretion, very discretional. There's not a lot of coding involved necessarily. So what we do is we go into larger hedge funds, asset management groups, prop shops who are essentially smaller trading firms trading on their own capital. And what we'll do is we'll bring in first developers that will build out this infrastructure. So essentially, from a tech standpoint, what do you need in place from a coding language? What does this look like as you're setting up our systems, having kind of everything in place, establishing connectivity to some of these larger trading exchanges. And then what we'll do is we'll start to actually build out those trading teams, bringing in traders, quants, so forth, across the board there. I guess breaking it down, firstly, to kind of give you a broader overview of what the space looks like, it can roughly be broken down into essentially like two components. So you have your buy side, which is essentially they are investing in large securities, large portions of the market with the purpose of we're doing fund management, right? And then
Hmm.
there's sell side, so essentially 50 50 kind of way of looking at it, which is essentially the ones that are brokeraging the deals. They are promoting, selling, trading these securities to the public, to other exchanges, to prop shops, etc. And essentially these quant developers, traders, researchers will sit on both sides. Slightly different skill set in terms of how they work. Typically, on my end, what we are focused on my specific team, Selby as a whole will kind of cover across the board. But we are really focused on people that sit within the buy side in very quantitative roles. Again, some of these traders typically we work higher level positions, so a bit more senior. You start to get people that have 10, 15 years of experience in the space. But again, we'll cover across the board. People from a few years in the space to people very senior. and experienced. From a technical standpoint, it varies a bit from shop to shop in terms of the type of technologies they're working with in house. And part of that will then also vary in terms of the type of trade they're running. So there's essentially three kind of buckets of tradings. One is called HFT, which is like super high frequency trading. Essentially that is someone who is trading some type of asset in milliseconds. They might be doing thousands of trades a second, potentially. Very high frequency, very fast paced. They're moving a lot of money very, very quickly on very complex algorithms. A lot of like HFT traders will want to write their code, their infrastructure in a C++, where you essentially get very low latency. The transaction speeds are usually a bit quicker. You're executing faster, and essentially you're racing against competition. There's multiple trade types, not to get kind of into all of that, but
Mhm.
speed is key for HFT firms and traders. Second bucket really gets into this more of like a mid-frequency category. Again, some of this is still done in C++, but here you start to see Python used as well for some of that infrastructure. Again, C++, Rust sometimes on the higher frequency side, sometimes more Python based, sometimes even Java for more the mid-frequency, and then again moving towards like some of the lower frequency side, which is kind of that third bucket. From there, you start to see some of that done systematically based on algorithms that's executing trading. But sometimes on that lower end where you might be doing a few trades a month, a few trades a week, as opposed to a ton a second. Essentially,
Mhm.
it starts to get a little bit more discretional just in terms of how they're actually going about executing in that sense. So again, that's just kind of like a broad overview. Um, I guess Tamika, anything to add on your end or?
Yeah, yeah. So on my end, I actually went and looked up the infrastructure for on the Python side, the infrastructure on the just in general, and then some common terms about basically high frequency trading. What does that look like? I didn't go into depth into jobs per se, but some of the things I actually have them here. I got my playlist of books that I pulled up here. Right, one of the books I pulled up was Python for Algorithm Trading. That's a seems like it's a popular book, and another one is Developing High Frequency Trading Systems. And when I was going through this particular book, what I was looking at was basically I can break down. I'm gonna share my screen here in a minute. But basically, it was talking about here understanding the trading exchange dynamics and how to architect a high frequency trading system. And for our group, that's super huge into understanding like how to develop um, with the logging, the performance, the networking, the architecture, what type of hardware. Because and it's so funny because I went back and looked at O'Reilly had conferences, and this was back in 2017, and the conferences that they had were based upon high frequency trading, and that's where I had met some of those guys that talked about building out the infrastructure. But it's just such a niche subject and such a niche location for someone to get into and start getting into that upper realm. And I know we talked about this before as to setting up your infrastructure, writing the code for it. I know we mentioned C++ and Python. I know you and I have talked before about Rust, and I think Rust is probably more on the crypto side that we're probably you're probably starting to see that in. But I'll let you dive off into that piece. But I also want to bring forward is when you and I were talking, what are the job titles that are out there so people can go take a run and look at it right now? And usually, how much experience are people looking at to get hired on as if they're building out the infrastructure wise?
Yeah, no, so it will vary a bit. And again, on the infrastructure side, I guess just to clarify, some of the Rust stuff is kind of more on the crypto side right now. Part of the reasoning behind that is, take like a Brevin Howard or a Citadel or these, very large established trading firms, names that a lot of people recognize. Their infrastructure has been established. It's been, built out for years and years. A lot of that done in again like a C++, a Python. It's kind of already established. Rust is fairly new still in the kind of long term scheme of tech, where some of it might make sense to do it in Rust as opposed to C++. But when things are already that far along, built out, you've now scaled up, managing billion-dollar portfolios. It starts to get hard to start to incorporate some of that. So you will see it sometimes on the TradFi side. It's just again smaller prop shops that have kind of popped up and scaled over the past few years. Again, typically in crypto, just kind of how you see it. Outside of that, so I guess quick on the languages, you'll also see, Java, VBA, people are using like MATLabs, Jupyter script. So inside of that, there is, multiple kind of layers in terms of individual tech stacks. And in terms of positions, how that kind of translate in terms of some of the job titles, it will vary a bit. So obviously you have your quant traders. There's kind of multiple levels. So there's junior traders, quant traders, senior quant traders. There will be PMs, which is essentially a portfolio manager. In that note, there's also sub portfolio manager, senior portfolio manager. So again, it will vary. A lot of layers in terms of the seniority structuring on that side, and it will be reflected in experience. Obviously you'll start more on that junior end and kind of move up throughout your career after gaining 2-3 years of experience is kind of roughly how I look at it at each stage. Obviously you can move quicker in an environment like this where you're kind of setting the pace for your performance. You're trading at not necessarily your discretion if it's very algorithmically focused, but you're actually developing the infrastructure. You're bringing in the money for the business. So a lot of potential to move up very quickly if you're very good in this space. um, Outside of just the traders, on the larger team that they work on, there are typically people just devoted to the tech side. So you get quant developers, again, junior quant developer, senior quant developer, kind of the three that you see most often. Actually helping build out some of the infrastructure. You take, in the crypto space, a lot of what I focus on, Deribit is a very popular exchange, similar to like a Coinbase or Binance that people go on and trade some type of digital asset. A lot of times, if someone wants to establish a trade, so we have this really good strategy, we'd like to run with it live, and basically allocate a portion of our portfolio, let's say a few $1 million to this. What you have to do is you have to establish those trade instances, set up that connectivity, essentially, again, that infrastructure. So a lot of times you'll bring in those quant developers to assist with some of the groundwork, and then actually, helping out with some of the execution, get things trading live, essentially. Outside of that, a lot of these firms will have standard tech positions where you're not necessarily quantitative, working very kind of, algorithmically in that sense.
Hmm.
But you'll, just a kind of standard software engineer, and of course, all the kind of position titles that you'd see with that, from more of kind of like a banking perspective. So that's kind of how I look at it. Outside of that, though, obviously there are multiple kind of layers. If you are on, so let's say like buy side, sell side, there are some slight differences. Sell side tends to be uh, just somewhat less quantitative, just depending on positions. There you'll typically see like an associate vice president, director, executive director, managing directors. Whereas on the buy side, we're starting to see like a lot of those quant titles. Again, it starts getting into the quant research, senior quant research, portfolio managers, quant traders, and the titles will slightly vary just depending on the nature of the shop. Again, the three kind of categories are prop shops, hedge funds, and asset management groups.
Hmm.
The way to kind of look at it there is, prop shop is, typically smaller, not all the time. Some of them will be, 100, 200 people, but typically a smaller group can be as small as, 3 to 5, where they essentially pull together their own money, sort of like a family office where, we have a few $1 million, whatever it is, we're going to go in and essentially start trading. A hedge fund is essentially started to raise some external capital. Don't quote me on these. These are kind of like roughly how I'd look at it.
Hmm.
Obviously, a little
Hmm.
bit more complex diving into it. But a hedge fund might have started as a prop. They're starting to raise external capital. They've built up kind of a greater amount of assets under management. Managing that money a little bit differently in that scenario might start getting into some of the more longer term trades. Again, will vary from shop to shop. And then asset management groups are, you think of like a Fidelity, a Vanguard, places where you're not necessarily seeing super high gains year on year. But
Hmm.
it's something where you see that kind of steady increase year in, year out. It's a little bit different in terms of how they structure their trades with different goals in mind, essentially. So just depending on the nature of each of those firms, they'll sometimes title positions a little bit differently, and then like salaries will essentially reflect that.
Oh
On the
yeah. That's what we need. That's what we want to get into is the salaries, because that's what we were talking about before. It was more or less like, okay, a base salary could be anywhere from what, 3 to 400,000. um and
Yeah,
then we were talking about what you can make on the P&L. So I'm gonna let you drop those numbers, for so you can hear it from the horse's mouth and not from me, and then we'll go from there.
yeah, no, and I guess starting, on the engineering side, I'm sure most of you are familiar to some of the kind of standard, engineering developer roles, what that looks like. You think of someone anywhere from 1 to 4 years of experience. Base compensation can be anywhere from 40,000, depending on the shop, to 150,000, give or take. Some type of performance bonus on the end of the year, or discretionary bonus based on that. 10-15%. Similarly, those numbers start to rise when you get 5, 10 years, 20 years of experience, up until those 200, 300K ranges, just given seniority level, and then obviously bonuses will increase a bit accordingly. On the comp side for you start talking about actual traders, it would be a different difference in terms of like education. So, a lot of quants do have some type of advanced mathematics, uh, computer science, physics degree, something along those lines, where they've gone through a lot more schooling. Some of these people have PhD backgrounds, again, either some type of like computer science, physics, mathematics. Again, very mathematical with some of the work that these guys and men and women are doing. So, obviously salaries start to reflect that. For some of these PhD grads, so people coming, right out of a graduate program, at an investment bank, typically what we'll see is, anywhere from 145 to 165,000 in terms of a base salary. Total comp there, 250 to 275,000. Obviously, that will vary a bit depending on the size of the firm. You start talking about like a mid-size hedge fund, typically 160 to 185,000, 3 to 500 on total comp, and then you start talking about an elite trading firm. So these are typically you're coming out of like a Columbia, Yale, you're an MIT, you have that kind of top 1% educational background, a top 10 university, and you're at one of the top shops right out of school. Typically anywhere from 175 on the base to 325,000, just in terms of base salary. In terms of total comp, like earnings on the year, again that 300,000 mark to you start getting up to about 750 or so. And again, these are people right out of university programs that are jumping into the space. Just under $1 million your first year is doable in this space. Um, on the sell side, just to kind of cover some of that, and then we can kind of go into the buy side where we start dealing with P&L. So sell side, an associate, assistant vice president, 175, 195 total comp, anywhere from 250 to just under 300,000 is what I'd anticipate. VP, it starts jumping up quite a bit.
And that's on
Um,
the sales side, right?
yeah, so typically this would be a sell side focused position. VPs, 200,000, 230 base, compensation ranges, starts getting up closer to 425 in terms of total comp. Once you start getting to it, director, executive director, managing director, it starts to drastically increase. So you start seeing 250 to 300 at that executive director level, managing directors 350 to 500,000 in terms of just base salary.
Hmm.
Total comp anywhere from 700,000 to 1.5 million becomes pretty realistic for some of those positions. So obviously very high earning. But on the quant side specifically, uh, buy side quants, so people that are actively trading, essentially writing their own strategies, developing alpha, is kind of what they call it in the space.
Yeah,
Just
seeking alpha, like the
yeah, so
yeah.
and so those are the ones that start to get very high, and essentially what that earning potential is it's mainly based on their performance. So it's something where, a lot of times you start out in the industry as like a quant researcher. So, you might be technical, doing a little bit of development work. Sometimes you're a quant developer and then kind of move more into the trading capacity. Just depends on your background and fit. Typically, they start at like 150,000, to 185,000 is typical, for someone newer in the space. Total compensation is usually consistent of some type of bonus. So if they sit on a larger trading team and the team has good performance, they're paid out either a guaranteed or discretionary bonus. So total compensation, can sometimes be 350,000 to 500,000 in a great year. If you're someone on the more senior side of that research, 800,000 in a good year is doable. Then you start talking about actual portfolio managers, and quant traders. Sometimes it essentially means the same thing. They'll use the term slightly different. Sometimes portfolio managers, means someone who is essentially running their own book of business. They're kind of an individual contributor. So, again, shop to shop will look at this slightly different in terms of what that position means. But when you start dealing with, people actually executing the trades, doing kind of the whole process. So, a lot of times the top earners in this space are ones that are helping develop the infrastructure. They're somewhat technical. They're very good on the mathematical side, actually developing the algorithms, and then also like seeking alpha, being able to determine what are those good trades that we should be going after. How
Mm-hmm.
should we essentially be managing this? Typical salaries are anywhere from 100 to 300,000. A lot of times you see it from 200 to $250,000 a year in terms of base. This will start to get kind of all over the place, because what they then do is they'll give you some type of split. And what this means is it's called a P&L split, which essentially means, based on our performance for the year, let's say you make $1 million, right? And then you have a 50% split, you'll get an additional 500,000. Not all the time is it, that 50%, based on what the total allocation is. So the amount of capital you're working on, this will start to vary in terms of how they structure these packages. You sometimes see someone who has no base salary, they're working off, a 60, 70% split, where, they are essentially making their own money. It's completely dependent on their success. You'll sometimes see people where, they might have $100,000, $200,000 as a salary, but they take that as a draw, which is essentially, if that same scenario where let's say we earn $1 million on the year in profit, I get my 50% split, just to use these numbers, makes math easier. And I took 200,000 on a draw. It means, I'm only paid an additional 300,000. That 200, was taken out of expected earnings. Oftentimes, we will see these salaries start to get really crazy, to be honest, where,
Mm-hmm.
again, 200 to 250, 100, depending on the shop in terms of base. But then in terms of these splits, it's not uncommon to see people where, their end of the year total compensation, multiple millions, just depending on, allocation, what they're managing, how successful a year that they've had. Typically, those P&L splits will vary a bit depending on the type of trade. So, if you're doing equities, fixed income, credit, like there's very different kind of asset classes.
Right. The different
Um,
asset classes.
and that'll kind of dictate how much we typically allocate, as a hedge fund, as a prop shop. And so we'll sometimes vary a little bit just depending on that, the types of trades, the risk that's associated. Certain trade types are obviously a lot riskier. You start thinking about crypto and DeFi. Even within that space, trading on centralized exchanges like a Binance is a lot different than trading very small tokens on Uniswap. So things
Mm-hmm.
that a lot of people haven't heard of, it just becomes a little bit riskier. There's a lot of very complex formulas, not to go into a ton of detail, that will essentially
Mm-hmm.
evaluate that risk, and essentially determine how comfortable different companies are with essentially dishing out money for the individual traders to use. But again, you start to see people where, depending on their portfolio size, the amount of money they're managing, depending on what those splits are, typically anywhere from like 15 to 40% seems to be typical. Within that range, companies will sometimes stagger it differently, just depending on seniority, how successful people have been. Some people will do it as like a sliding scale. So, we'll pay you, this percent on the first, million of profit. We'll pay you this on the second, million, and so forth. Sometimes it's dependent on the Sharpe ratio, which is essentially a way to measure performance and risk associated with trade. So will vary a bit. But again, I've spoken to individuals that were earning 32, 34 million a year, year in, year out on this type of trading. The top percent of that industry is, people that are usually retired in their, mid 30s. It's, one of those industries where you see people, you know, working very hard for, a period of time, 10 years, 12 years, and then, they can kind of move on to other things, just given the nature of how some of these payment structures work. So definitely crazy when you start to kind of dive into it and
Right.
see, I guess, what that looks like.
Yeah, and you did have a question. I think it was going back to when you were saying people had, do you need a PhD to be in the field? Because you were talking about some researchers and some people have PhDs, but I think you stated in the beginning the first 1 to 4 years they don't need to have a PhD. That comes with experience, and maybe you go back and get your PhD in physics or math or something of that nature. But I'll
Yeah,
let you clarify that.
yeah, no, so it will vary a bit. You start thinking about kind of the largest trading firms. So, again, those kind of that elite tier, a lot of them will want to see, PhDs, and not just the PhD or masters. They also want to see it from, top 10 school, with, good GPA. Like, it starts to get very kind of,
Competition.
yeah, it's a lot of competition, very high bar to get into some of these firms. You look at the earning potential, it makes a lot of sense. That being said, there are, prop shops, smaller firms where you can get in without that. Especially from a development standpoint, it's not uncommon to see a developer who, has a computer science degree undergrad. They've gotten into quant development just kind of by chance, honestly. Sometimes they'll take a job, start getting on that type of work, and kind of growing from there. Same thing on the research side. You'll sometimes see, masters or undergraduates be able to get into the space, albeit a little bit harder. Still want to see, that strong educational background, but not something that can't be done. But it is one of those career fields where, the top percent of the industry that's making those kind of numbers typically, not all the time, have that type of higher level education and degree. But I guess to Tamika's point, it is something where, if you're in that space and you continue throughout school. I have talked to people where, they had an undergraduate or master's, and then, they've kind of been in school while working, or so, it is flexible. It starts to get case by case, to be honest, in terms of, your individual background, your skill set, just to determine, I guess, what makes sense there.
Right. Another question you had, someone had, was how is the interview? I'm assuming how is the interview process? I'm assuming there's maybe some some type of coding background, some type of portfolio, some type of website somebody can go look at your code or something of that nature. But I'll let you
Yeah.
answer that.
No, so this will vary a bit if it's going to be, more tech focused, or if it's going to be more of like a research position, more trading. Obviously, like slightly different processes, and also the length of interviews will vary based on seniority, of course. Typically anywhere from, 3 to 6 rounds is kind of what I would ballpark things at. Obviously, that will vary a bit firm to firm based on who they have in process. Um, Typical interview. Obviously, there's a much higher, barrier to entry when they're looking over CVs. They're kind of reviewing your background, seeing, is this someone we'd like to kind of, bring in and have this conversation with. But once you get into that point, similar to what you'd see at, interviews across the board, usually that first call is a bit more of an intake. Culture assessment. Is this someone that we like, think would make sense for this position? They want to hear about your background. Typical kind of interview questions. And then depending on the role itself, it will start to get a bit more technical, or a bit more, math focused, honestly, for some of the more kind of algo based traders or developers, where they want to have, here, walk me through this type of simulation. This is what we're doing. Let me see your ideas. A lot of times traders essentially retain the right to their intellectual property, which will essentially mean, they have a trading strategy that they've run. They might have run this at multiple different shops in the past. We want to hear, it might be like NDAs. Like, it gets kind of complex, just
Mm-hmm.
given
Mm-hmm.
a lot of, value in that information, and sharing it. But in terms of, like, how do you trade? What is your style? Are you trading? Some people trade on momentum, which is, as the market goes up, I'm trading. As it goes down, I'm trading in a certain way where I can still kind of capitalize off this. Certain people will do, just very different types of trade. They're doing like arbitrage between exchanges. or like just trying to kind of, find the, uh, you know, price points that might be different and how can I kind of capitalize off this opportunity. On the crypto side specifically, it starts to get kind of all out there, especially
Mhm.
in DeFi. So really, that's a big part of that first round with a lot of people. Even if you're a researcher, what types of teams have you sat on? Type of trades. Obviously, you're not into this interview unless they know that the assets you've worked on have aligned, or there's some kind of
Right.
carryover. But going over that, typically, next steps are meeting with individual team leads or individual developers you're working on. If you're a trader, working through some of the logistics of how do we set up this infrastructure for this specific situation and trade. For a lot of these, you're essentially the product of these companies where you're bringing in the money. It's kind of almost like running a miniature business inside of the business. So it becomes very kind of tailored case by case for some of these. And then, of course, on the tech side, different tech tests and assessment, really kind of what you'd expect there, but can, I guess, vary slightly is how I'd look at it.
Right. And I was looking at some of the actual assets. So when I was, and I'm looking it up right now because I'm right now I'm looking at a quantitative portfolio management. Like I was looking at that book, and then I was looking to see if they had a list of the, because I saw it earlier, a list of the actual a list of the actual asset classes. Can you speak on the asset classes? Some or even what are your favorites if that's the case?
Yeah, no, and I guess to cover it kind of high level, because it starts to get,
Oh yeah, I saw the
you
book. I saw the
you
book.
you got to
It
get
gets it. Yeah.
yeah, it gets complex, and there's kind of different layers, I guess, as a way to look at it. It's also worth noting that even for someone like myself, it starts to get very specialized, where people get into a very kind of niche market within trading. You think of like fixed income, essentially. There's credit, people that are trading on credit rates. You have God, what else? There's so credit, fixed income. You'll have equities. You'll have options traders, futures trading. Again, within these, there's different types. You'll have like OTC options. You'll have just spot options. So it starts to get even kind of different classes underneath of these kind of overlying assets as a way to look at it.
Hmm.
And then it starts to get kind of out there. You have people that will start trading on different exotics. People will trade like grain is something. So I have a colleague of mine sits in New York that will specialize in some of these exotic classes where people will trade on weather. Again, this is not my area of expertise. Don't exactly have a great overview to tell you how that works, but there's quants that will actually essentially, what does the weather look like? It becomes some type of trade. Again, not my area. People will trade on different products. So you can trade on like gas, oil, soil itself. So it starts to get like a bunch of different classes with some of those exotic categories. And then crypto is a big one in the digital asset space. That's kind of my niche area. I've worked in the space uh, about 2.5 3 years specifically in crypto. Breaking that down, I guess it's you start getting centralized exchanges. So again, like a Coinbase, Binance. Typically, people are trading on a Bitcoin, an Ethereum, one of the kind of top coins. Again, you start to get some of the smaller coins like a Binance, I think, has
Hmm.
155 tokens. Typically people will kind of stay within that top 100 or so. But then larger shops, people start getting 250, 500 different assets that they're trading. Start doing stuff within DeFi. Um, a lot of that is Ethereum focused in DeFi, and in terms of like it's within the EVM network. So it's
Hmm.
a Uniswap is probably a name people have heard of.
Right.
An OKX, different exchanges. Some smaller firms and people that want to get essentially more niche within crypto will start trading on some of those different ecosystems. So this is where you start talking about like a Polkadot, a Cosmos, Optimism, Arbitrum, really similar to like the Ethereum network. It's just essentially a different chain, different infrastructure.
Hmm.
Different companies will have their platforms set up on that infrastructure, and there's different trading opportunities there. Will vary a bit just based on what that looks like. And then some firms will really specialize in those smaller areas. So again, it gets a lot in detail. not to kind of dive in too much, it starts to get,
Gotcha.
I think, confusing for most. So
Oh no, I get it. I understand. I think most of the people out there did understand. One of the other questions was actually two, three more questions was, do the are the jobs posted outside of LinkedIn or they're shared at the school, or how do people find out these particular jobs?
yeah, no, I mean, great question. There are a few different websites. LinkedIn is great. I'm sure most people know where a lot of information's there. I would also encourage people to for something like this in quant finance. A lot of these firms are very secretive, right? You go on their website. There's not a lot of information out there. It's hard to figure out who works there, what exactly they're trading. A lot of traders in the space aren't very open about what they do because there's a lot of competition and a lot of money on the line. This becomes an industry where they are really going through a lot of different headhunters. So, recruitment agencies, people like myself that will then have access to kind of a wide number of firms. A lot of them day to day seems very hectic, to be completely honest, when you start getting with some of these trading positions. So they'll usually kind of outsource some of that work. Some of it's done in house through their own website. But again, LinkedIn, eFinancial is a great website as well. A lot of different career opportunities in the financial services industry, can be found on there. Something that we utilize here at Selby as well. Um, Again, this will be for quant finance. You'll also see different tech roles. You'll sometimes see an HR position. It's just kind of across the board in that
Hmm.
financial services space sometimes. Outside of that, I think some people, see this as sometimes not the best option, but sometimes going on like a Google or Yahoo and using their platform for jobs where it'll pull up a number of different sites is sometimes great in terms of being able to kind of quickly see what's out there. Again, crypto specific, like crypto jobs is a good one. There are a few more niche sites out there. If you play around like Rust jobs and on the Rust side,
Hmm.
it starts to get kind of smaller in terms of some of the companies they're working with. But obviously a bit biased, but in this space, it is worth reaching out to a recruiter or going through someone, just given it's sometimes hard to like identify who's hiring, what those firms look like, and to really gain information on a lot of these firms. People like myself and companies like Selby, where you have 15-year relationships with some of these different groups, you kind of really understand the ins and outs of these companies that isn't necessarily publicly advertised. Um, Sometimes a little bit easier to kind of walk you through what those opportunities look like. How do I go about these interview processes? But again, Google's great, Yahoo, get out there and just type it in, see what comes up, and I guess start asking kind of thing.
Right. No, one of the comments casual economists stated was it seems like the barrier to entry is to get a PhD from Harvard or MIT or Yale. And I think this is where I go back and say go to the smaller companies, get your foot in the door and then push your way up. But with that being said, is there a block for someone who doesn't come from a PhD from Harvard or Yale? Maybe you got your PhD at Georgia Tech, or you got your PhD over at Morehouse or something of that nature. What does that look like for someone who didn't come out of the top 1%?
Yeah, no, I mean, great question. Georgia Tech, I think, is like a sneaky one where Georgia Tech is a very good program for
Mm-hmm.
certain things. So that starts to get into the same kind of category with your MITs that, depending on the major, I guess, is how I'll
Mm-hmm.
put it. But yeah, no, I mean, there is definitely a high barrier of entry. Um, Again, you want to see like a Stanford, Columbia, a Cornell, like you start to have that type of competition, but you will sometimes have someone who went to a state college, or you mentioned like a Morehouse, smaller school that ends up at a smaller, let's say, like family office type trading. In those smaller firms, you sometimes have the opportunity to kind of wear multiple hats, to gain experience, to work very hands on with some of those people that might have the PhD at the firm, and learn from them essentially. In those situations, typically it becomes, what is your actual experience, right? So if you can get in that type of position, gain 2 3 years of very relevant experience, from a trading standpoint, if you start to develop your own strategies, even without the education, if you have a very good strategy, you can make a lot of money if people give you money to make money essentially. there will start to open up those opportunities. Worth noting, I don't want to put him on the spot. So I met a guy, very friendly at this point. He had come from I don't even know the university off the top of my head. Normal college education background, like Bachelor of Arts degree. Very technical, not necessarily computer science background, even just very technical. Was coding C++, built infrastructure for a trading firm starting I want to say like 20 $30,000 of capital day one. It was him and two three other people. They scaled up to 350 million in about 3 4 years. This is someone who I don't know exact numbers on his takeaway, but when you start talking about those people, 30 million plus earnings a year, he starts to fall into this category. Some of the opportunities he now has just 4 or 5 years later are ones that are going to be very similar. Not someone you would look at 4 or 5 years ago in his background and say, hey, he's going to be, multi million. Again, just kind of went out there, somewhat luck getting in at the right shop at the right time, working with the right people. But it is completely doable. It's
Mhm.
also worth noting on the crypto side, it is somewhat easier at just given there's a lot of interest expansion in that space, a lot of gray area with like SEC and different regulations globally, obviously. But it is an area where the barrier to trade in a higher capacity is less. And I guess to kind of clarify what I mean by that is, it's sometimes hard as like an individual trader. So someone like myself, if I want to go on, Charles Schwab or Robin, just to start to trade and put together a portfolio of my own that would be competitive with some of these people. Whereas with crypto, uh, you're kind of on the same playing field, even with some of these larger shops. Obviously, they probably have a lot more capital that they're actually working with, that they're trading with, a lot more complexity behind that. But again, if you can develop strategies on your own that are performing well, and you can document that performance, document your Sharp ratio, your different performance metrics, um, there's a very good chance to get your foot in the door somewhere based on that alone. Again, sometimes it means starting in more of a junior position on the research side and kind of working up. But again, you look at the career trajectory of some of these type of roles. If you get your foot in the door and you're someone that shows that you're working hard, you're successful in that role, it starts to open up. But again, very very competitive is kind of the reality
Right.
of it.
Right. Another question was, do the quants do they utilize machine learning, deep learning, and traditional numerical analysis?
Yeah, no,
Um.
and machine learning is huge right now across the board. I know people look at like AI and it's like taking over. I think Snapchat has AI now, which is an interesting turn of events this year. But yeah, no, I
Mm-hmm.
mean some of these shops are very heavy machine learning, AI. You talk about like deep learning, so it does start to get into that in terms of like numerical analysis. Uh, yeah, I mean it's very math heavy. They're running different, like a Monte Carlo simulation. Like it starts to get very complex in terms of some of those like mathematical formulas that they're then
Mm-hmm.
putting into code and then trading on in some type of strategy. Some of that, I've read a lot of books. You talk to a lot of people in the space. Some of it just gets super super high level. Again,
Mm-hmm.
you're getting PhD in math and physics, very complex in terms of what that looks like from like an equation algorithmic standpoint. But again, every shop's a little bit different just in terms of how
Yeah.
they run things.
And in my head, I see it no different than, say, me working at an insurance company, right? And working at an insurance company for someone coming in on the wealth management side at an insurance company, and they have an annuity, or they have some type of wealth management. They're running that Monte Carlo or a map model to guide and say, okay, this is the best place to put your wealth here. It's going to grow over X, Y, and Z time, versus the trading portion of that could be like, hey, we're going to allocate 5 million. We're going to use that portion out of that wealth management or that family office or whatever, and go across some trades here. Here's our expected return on that. And then and not take your whole portfolio, not take your whole 20 million and do the trading, just a small snippet of that. But that's how I'm hearing that. And it sounds like somebody who's working maybe for an insurance company on the back end of that will be doing something of that nature. That's what that sounds like to me. But that could be wrong. But that's what it sounds like to me. Um, Evelyn asked about where do employees typically hang out? I'm assuming in the financial district at a bar.
Yeah, no, this will vary. I think, to be brutally honest, some of these people are working very long hours. Even people like myself who are not trading, you're just in the space. Sometimes it's you're 8 to 10. It just will vary. That being said, typically I guess this is kind of interesting. So you look at a lot of prop shops are typically based out of Chicago, and this is just from like a North American U.S. perspective. A lot of hedge funds you'll typically see out of New York, so like Midtown or the financial district, and then a lot of larger asset management firms are out of Boston. So you think of a city like a Chicago, Boston, New York. What are fun things to do when you go out with friends, with coworkers? So yeah, a lot of bars, a lot of different like networking events that they'll do. Meeting different people and different teams, especially when you start to talk about some of these larger firms. There's a bunch of different conferences. So I had earlier this week. There's a company called Panoptic, which is essentially a DeFi options trading platform. Jesper, who is one of the co-founders, actually, I worked with him when I was over at Advanced Blockchain. So they had like a big event, like launching their product, had a big demo. I met several people, again, not to put people on the spot, from different trading firms who were stat arb options trader. You get someone who's trading fixed income at like a Two Sigma, some of these larger shops. So you start to see people in this space that have very genuine interest in the industry. They're going to different
Hmm.
events outside of the normal working hours, calling friends. So again, pretty good culture. And then obviously going out for drinks with coworkers, dinners, whatever that might be, is always fun.
So here's an easier question too. What are some names of some companies? I know you mentioned Two Sigma. We mentioned Selby Jennings. I'm pretty sure there are a ton of other little smaller entities, not the bigger entities. But what would be a keyword search? Let's put it like that. What would be a keyword search someone could use to go look up these companies? If you didn't have a list, what would be a keyword search?
Yeah, no, I mean, if you look up like hedge funds or prop trading, asset management, family offices, like usually those terms, you'll start to see places that'll be relevant. And then what you want to see is they have some type of portfolio or trading. Sometimes we'll right on their website will say systematic prop shop or discretionary traders or whatever it might be. Again, Selby's a little bit different, where we are essentially like more of like consulting service. So we're not actually executing and doing trades ourselves. We're partnered with a lot of companies in the space that are. But again, we're one of the larger firms in this space at Selby. We have 18 offices globally. Very very built out business.
Hmm.
Thousands of people. So we are kind of well versed in that sense. I don't know how many recruitment firms are necessarily at that level, to be honest. It's
Hmm.
something where I know we've been friendly since back when I was at X4, another staffing firm in the space. Um, I'd interviewed with a lot of different companies. Given my background, had the opportunity to do so. Very fortunate. Truly after kind of having those conversations and ending up here, um, very well connected in that sense. In terms of some of those names of firms, so again, the kind of bigger ones, you'll look at like a BlackRock, Two Sigma, I mentioned Citadel, Hudson River Trading. Like these are like, if you're in the space, these are probably the larger names. On the crypto side, it starts to get a little bit smaller with different companies that are out there. You get like smaller shops like a Chiron Labs, where again, if you're in the space, you might have heard of them. But again, starts to get a little bit more niche, and then that'll kind of carry out throughout the other kind of asset classes as well, where you have more kind of specialized firms that really focus on a specific trade type, essentially. But again, if you look up, prop shop, hedge fund, things of that nature, you'll start to see what those names look like. Also, on the AI note, Chat GPT is great. Where this is a great question for Chat GPT. You go in there, put in, what are the
Right.
top 10 hedge funds or something, and again, kind of go down that rabbit hole. It's always a fun
Yep.
time.
And I know you got a hard stop here at 7, right?
Yeah, and I gotta just run in the next like bit just for
Y-
another call I'd had, but
Yeah, that's okay. This is my last question. Um, the question is, are the companies registered? They're hedge funds, so I mean, BlackRock is registered, so that would, Evelyn, that question would depend on what you're looking at when it comes to that, because you can have a hedge fund and just be a fund and not necessarily uh not be necessarily, I guess you'll be registered with the SEC, but you may not have any quants under your belt there. You might not. I don't know. Depends on the hedge fund, I guess, too.
yeah, no, and again, I'm probably not the best in terms of my expertise on that specific kind of the legality behind kind of an
Hmm.
organizational structure. But it's worth mentioning if you are a company that's actively trading, very profitable off the stock market or
Yeah.
crypto, whatever it is, you are you're talking to the IRS, you're talking to the SEC,
Yeah,
you're
yeah, you had your fund set up, but like
yeah.
your fund, you had your LLP, your limited funds, you have all your different structures, your holding companies and so forth and so on, but that doesn't necessarily mean that you may or may not be registered with the SEC, right? You may not be registered, not well, let's say this, the larger entity may not be registered with the SEC. It may be a smaller entity within that's registered with the SEC, if we want to look at it that way. But to answer your question, Evelyn, again, what it sounds like to me, you gonna have to do some research. You have Joe's information. He's been here before. You can look him up on LinkedIn. And what I would say is I would start crafting my own list. And start crafting your own set of skills as well too. I'll probably do a deeper dive on this next week, because I have 10 books that I pulled to go through, and then pull out what the meaning behind each one of those books. Like, how do you set up the infrastructure using Python? How do you set it up using Rust? How do you set up using C++? What skill sets do you need in order to get through that and go from there? So I'll do that next week, and I'll run that list by you, Joe. And you can add input or whatnot, and I'll run this back in a deeper next week. But I wanted you all to have an idea of like what we're talking about here, where somebody may come in at 40 to 150, or they may come in at 2 to 300, but they may get 20%, 10%, 30% on a P&L. uh what does it look like to be a portfolio manager? What is it like? Different things. Here's one thing we know about all of this: trading is not going anywhere, and trading is international. So I'm just trying to give you stuff that gives you to think outside of the box versus having the day to day. And Joe, anything you want to add before you get out of here? Because I know you had to
Yeah, no, no,
do
no. I
your
mean,
thing.
that covers a lot. Again, I apologize. I had the other chat pulled up, so I'm seeing some of the different comments and
Right,
trying to
right,
make
right.
sure I had addressed everything. I think the one that one of the things I'd seen, just questions. I don't know if we had covered in
Mhm.
terms of like how people continually gain knowledge, which is a great point. A lot of people, again, you're attending conferences, you're speaking to colleagues in the space, constantly taking classes, kind of a thing. So definitely worth kind of noting. But again, on the kind of asset side, I know you just touched on it. It's also, you take the U.S. stock market, but there's also, you have like an Asian Pacific stock. You have, the stock
Mhm.
exchange out of London. You start to have individual experts that will cover even these niche areas globally. So again, a lot of opportunity out there, not just U.S. based, but abroad, and to work for a global firm and get that kind of covered. So definitely worth kind of looking into if you're interested in that sense.
Yeah, and just off the top of my head, I'm not sure how they're still around, but Yahoo is still around. Yahoo is still around, and I'm sure they have some jobs as well too. Just putting it out there. But thank you again, Joe. I hope these numbers made sense to everybody. I hope this you treat this as another path. Check out Joe online. Also, Joe, you want to leave how people can get in touch with you, your contact info or what have you?
Yeah, no, LinkedIn is usually great. First name, last name, right there on LinkedIn. You'll recognize me, I'm sure. So
Hmm.
hopefully, feel free to shoot me a message. Should be open for people to do so. And then I want to say I have like my email on there, but just first name dot last name at selbjennings.com. Feel free, however you want to reach out, and then again we can take it to Telegram or whatever's easier for people. But you know, uh, very happy to share info and help out in any way I can. Love doing these, and getting people
Yeah,
interested in different topics in tech
yeah,
is
we got to
awesome.
work on
So
a curriculum. I know we were talking about working on a curriculum for that. We got to work on that. I got a school that may be interested, Joe, that we could put together a curriculum for just getting in, just as a baseline, and maybe even looking at portfolio management. What does that look like, right? Because
yeah,
you never hear people talking about that, but we'll get into it. We'll talk about it a little bit more.
yeah, no, I mean, sounds great. Definitely, happy to be involved if I can be. So awesome.
Yep,
But again, I got to run for the call.
yep,
Appreciate you having me on. Look forward. Definitely reach out if there's any questions. But hopefully we'll be back again soon.
yep. Appreciate you, Joe. See you later. All right. All right, everybody. I hope you had a good idea of what I was talking about. I want to bring that to you when you start talking numbers: 1 million, 2 million, 3 million, 30 million, 40 million. That's the conversation that we were having. I wanted you all to have that information too. I don't want you to limit yourself to what we have right now. Just as far as SRE, DevSecOps, cloud engineering, and stuff like that, but think about the infrastructure at a hedge fund, the security at a hedge fund, like I've said before. What does that look like? Who are the players in the industry? How can you get involved in that, as well as what does it look like for you to have those skill sets and so forth? So again, we know C plus plus. There's a book out there. Actually, I was just looking at it. Let me pull up what I was looking at on Safari. I haven't finished my playlist just yet, but let me pull this playlist up for you, and then I'll share my screen here. Um, Let me pull this up real quick. Let's see. Hmm, I don't want to do that. I want to do a tab. Here we go. All right, so here's a playlist that I'm formulating right now, but I'll go back and finish it off. So developing high frequency trading, looking at that, Python for algorithm trading, the money formula, hands-on financial trading with Python, quantitative portfolio management. And blow up a little bit more. It looks a little small on screen to me, but hopefully it's big enough. And mastering financial pattern recognition. These are just some of the books that I'm looking at when I pull information. And the reason why, if you look at the money formula here, we'll go into that, and then I'll look at the table of contents there. Let's give it some time there to change screens here. It seems like it's taking forever. All right, let's go back over here and let's look at um that's chapter 6. I want to look at what they have here. It looks like I can't look at the thingy. Well, let's do this. Let's close this, and then let's go up here to the actual the table of contents. All right, so chapter 3, risk management, chapter 2, going random, chapter 1. And then there should be table of contents in here somewhere. Here we go. All right, so table of contents, early models, finding equilibrium, going random. Here's technical analysis and quant analysis when we're talking about risk management. market makers options. What are options for? And then we start getting here to derivatives. And then you can see here where they started talking about market price of risk, the delta hedge, new flavors, decision costs, all these little different things that you probably never ever thought about, never heard about. When you start talking about trading with bots, trading with bots is another one as well too. That a lot of people do. They create their own bot and they start trading with bots as well. So again, quantum finance, and they talk about how to abuse the system, but systematic threat. Again, high speed trading provides liquidity, right? Um, millions, billions of dollars, just things that I'm looking at. I'm gonna pull information from these particular books. I have some more books. I'll pull it all together next week, so you at least have an idea of what that is, what we're talking about, and so forth, right? Engineer cannabis, you said the biggest question I always need to ask every quant is how do they decide what features or variables do they choose for trading? The book Pattern Recognition is a great book, especially in financial algorithms predictor. Yeah. But I think that comes with experience and talking again. When we start talking about getting into what it looks like to do algorithmic trading with Python, with C++, with Rust, and then you start talking about, well, what does that look like? Again, what does your portfolio look like? How can someone trust you? Again, if I give you $30,000 to trade, it goes back to the money. It's if I give you $30,000 to trade, and you say you're gonna promise me a 10% return on this trade, how do you how are you guaranteeing that, right? What are you using to guaranteeing that? What algorithm are you using? Are you creating your own algorithm? um what does that look like? What protections do you have in place in case you lose somebody's money? It's a risk. So these are things that you can think about, and these are things that you can come up with as well too. Pearson coefficients versus Spearman coefficient. I've been studying all this, especially with Python. We need to do a string. Yeah. So again, I'm just trying to show you like a different side of the house, right? You hear what he said, right? Some people need to come out of they're looking at MIT, Harvard, and Yale. So in my head, what I say is go to MIT, Harvard, and Yale and look at their networking events and look at their job events to find out who's coming there. When you go there and find out who's coming there, go look those companies up to see what kind of jobs do they have, and then from the kind of jobs that they have, what are they recruiting for, and then start looking at those companies. That's how I would do it. I would go back to I would go to Harvard, Yale, Brown, Harvey Mudd, all those schools. I would go look at the networking events and the hiring events that they have. I would see who shows what day, what companies are coming on campus because it's got to be some type of sign up. Then I would go research those companies to see who's hiring for quants, who's hiring for developers, what programming languages they're hiring for, and then I would take it one step further to see what those companies on their websites have, and even one step further, what recruiters are recruiting from LinkedIn on those sites. And then I would show up at the event on campus. Right? I would show up at the event. Right? I would show up at the event. Right? um that's what I would do. That's how I would get in the door. I would get in the door and start asking questions from that perspective. Finding out what networking events, like somebody got to study algorithms, somebody has to study Python, somebody has to study how to set those things up. um and I was looking at the now it depends on the event, Evelyn. It depends on the event. The event may not be on campus, the event may be somewhere else. But again, that's how I would look at it. When you're looking at what they're when you start looking at Python and looking at the infrastructure, what most of the stuff I saw was containers, building out containers, building out the infrastructure, securing that. Again, everything has to be quick. So if you understand how to time your code, how to speed up the process of your code, should you be using a stack? Should you be using a queue? Should you be using a linked list? Right. So it depends. It really does depend. So that would be my take. But again, that's how I would go back and look at it. Sometimes those events aren't on campus. Sometimes those events are remote locations. Financial algorithms utilizing quantum computing. That is, yeah, that's another one. Um, Edward Warren, you said, does it make more sense to move to Texas to look for better work opportunities from, I'm not sure, I guess that West New York, I'm assuming, versus in-state opportunities in New York? I don't know. When you're asking that question, are you talking about quants or are you just talking about opportunities in general? Again, when we're talking about these quants and stuff, right? We're talking about places that have um financial districts. So your bigger financial districts, like you said, Chicago, New York, Boston. But there's a financial district in North Carolina. There's a financial district in North Carolina. There's a financial district in Chicago. I don't know. D, correct me if I'm wrong. Does San Francisco have a financial district as well? Yeah, San Francisco. But then look at the companies that are there, right? See if these are companies that are nationally recognized. Look at those companies and see. And again, I keep trying to tell you, like, when we're talking about wealth management and you're talking about family offices, you got family offices, starting at 10 million. They have to maintain these people money, right? So I give you my 10 million to manage. I want you to grow my 10 million to 20 million. How do I grow my 10 million to 20 million? How do I do that, right? So as a family office who's as a person who's managing that family office, I need to protect the assets, I need to protect the risk, and I need to grow it. So how do I do that? So look for family offices, all right? And then family offices, your 10 million, 20 million, 30 million, 100 million. Remember I told spoke to you all earlier. Was it might have been late last year, earlier this year. They start running together. With some rooms, in order to get in the room, you had to have $500 million just to sit at the table. You had to have 500 million just to sit at the table. And what I'm trying to tell you is, you're we're wasting like all this time over here arguing about stuff when people are sitting in a room at 500 million and 1 billion making decisions for you on how you gonna live your life, what they're gonna market to you, how you gonna grow your wealth, how you're not gonna grow your wealth, and so forth, right? So we gotta get in these spaces where we're growing our money. Take your $50,000 and grow it to a million. Take your $100,000, grow it to 2 million. Whatever the case may be. How do you do that? What doors are you knocking on, and where are you at, right? So we want to make sure that we're doing that. And this is just another way. That's all it is. This is another way. Casual economist, my crappy job make me rich one day. I gotta learn. Yeah, you gotta learn the ASAP. Yeah, you gotta learn the ASAP, right? You gotta learn how to make your money and make it grow. All right. Yeah, I don't know, Edward Warren, what you were looking at for skill wise. Let me say that, skill wise, and what you're looking to do. Texas is still growing, but so is Florida. So is different parts of Georgia. So is Tennessee, right? So it depends on what you're looking to do and what you're looking to get out of it. Remember, you could invest in real estate from anywhere. You could do virtual real estate, or you could do something local. It depends on what you want to do, right? So those are my thought process. I hope y'all enjoyed today. I hope you enjoyed these numbers. I know that it sounds like it's over your head. It was meant to be over your head, but it was also meant to let you know there's other things out there, right? Some of you are very good at programming, some of you are very good at math, some of you are very good at physics, some of you are very good at managing things, some of you are very good at adopting new sets of skills. But don't let because you're not graduating from Harvard or Yale be the on your downfall of why you want try to get in the room. I do have some more quants that I want to bring on as well too. Even some AI machine learning folks that I want to bring on. This is our longer tech Tuesday, but again, this is just something to just to think about, right? Just something to think about. 4,900 are worth 100 million. 40. Yep. 500 million. Yep. Quants would be found in energy also. Yep. Energy. Even if you want to look at energy, you want to look at anything again, trading with gas, of energy, gas, even in the EV space, and just don't limit yourself to thinking about um the United States. Don't limit yourself to thinking about the United States. Think about trading internationally, and algorithms internationally. Like think about it from that perspective. The if time I heard of quants was 2008 recession. Yep. I love algorithms part, especially in predicting stock market and many. Yep. So again, predicting stock market options. You saw some of the books that I was going through to read over. I'm gonna pull some information from there, and then bring that back next week. So next week it'll be part two of the quant session. It'll be your tech tip. Next week I'll go over books and my why. I give you my why for those books, and I'll give you a list of job locations of what I found as well too. I got to slack some of y'all. I ain't trying to blow up the spot in public. That's why I don't blow it up. But again, if you don't want to make a million, if you don't want to make 2 million, if you don't want to make money on the P&L, did y'all understand what he meant by P&L? Did y'all understand what he meant when he said on the P&L? All right, profit and loss there. Okay, you didn't understand that. Okay. All right. So P&L. So when he was talking about making money on the P&L, meaning, okay, I can come in, yeah, I could come in at a base salary, say, of 100,000 to 200,000. But instead of me negotiating for stocks, or negotiating for time off or what have you, I negotiate on the P&L side. So on the P&L side, if the company is profitable, say my algorithm, my performance is profitable, and say let's say we like he said, let's say he made 3 million or off of my algorithm or performance, right? And I negotiated for 10% on a P&L, right? So I means I'm getting 10% on that 3 million. It could be 10% on 30 million. It could be 10% on 50 million. That's coming right back to me. So my total could be that 100,000, 200,000 plus 10% of that 3 million or 10% of that 30 million or whatever the case may be. I hope that made sense. So what is 10% of 3 million? I know what it is, that's just off the top of my head, but I just want to see you type it in. What is 10% of 3 million? And what's 10% of 300 million? Now add that to your base salary that say maybe 200,000. Say your base salary is 200. Right. Now add that to your 200. That's what your take home is for that year. It's your base plus the P&L. Does that I hope that made sense. Right? So again, we're talking about negotiating on stocks. They're talking about negotiating on P&L. Different type of conversation. Different type of ball game, right? I hope that made sense. Let me know if that made sense. And I pulled this up right here. So let me do this. Oops. Here we go. Let me do this right here. So profit and loss statement, right? So on your P&L, right? Yeah, this is what it means, profit and loss statement, right? A P&L or profit and loss statement refers to the financial statement that summarizes the revenues, the costs, the expenses incurred during a specific period, usually a quarter or fiscal year. These records provide information about a company's ability or inability to generate profit by increasing revenue, reducing costs, or both. P&L statements are often presented on a cash or accrual basis. Company managers and investors use P&L statements to analyze the financial health of a company. Most of your nonprofits should have some type of P&L because they should be public as well too, right? So here is another one. The P&L statement is one of the three financial statements that every public company issues quarterly and annually, along with the balance sheet and the cash flow statement. When used together, the P&L statement, the balance sheet, and the cash flow statement provide an in-depth look at a company's overall financial performance. Statements are prepared using the cash method or accrual method of accounting. It is important to compare P&L statements from different accounting periods, as any changes over time become more meaningful than the number of more meaningful than the numbers themselves. So your bookkeepers that are out there, say you go to buy a company or something like that, your bookkeepers are gonna come into play for that, right? Your bookkeepers are gonna come to play for that. Yep. So yeah, 300,000 plus your 200,000. Some of the conversations we had, he was talk saying that some people can range on a yearly basis. They may go from 1.2 million to 5 million to 10 million, and then they retire. So they may only be in the game 5 to 6 years, and then they retire. They create a family office, and now they're just maintaining wealth, and then they're going off to do other things, right? So imagine working a job where you could retire in, say, 5 to 6 years, 5 to 7 years, again, 10 year stretch, right? And you just had that money stacked away, and that money's working for you because you know how to make that money work. And now you're sitting back at 40, 50 years old, retired with 20, 10, 20 million. You're not gonna just sit at home for next 20 years. You're gonna go invest and do something else because it's just in you. It's just in you to go work. You may work 6 months out of the year, you may work 3 months out of the year. All right. Yep. Yep. I'm just giving you numbers. Just giving you numbers. All right. So keep these things in mind whenever you get bored and you feel like you want to give up, or life's too hard, or this is, just think there's somebody always out there working and churning and trading on anything, right? So I'll give you the different industries, the different asset classes in which people trade on. I'll pull that, and let me know if you all leave a comment in the comment section, or hit us up on Slack if you found this interesting. All right. So until we see you again, I'll see you tomorrow for the meetup. Until we meet again, have fun.